The 27th of March, get the briefing underway, and looking at the charts this morning, I guess I don't really have to update you much on what happened with this repeal of Obamacare on Friday. As you can see, basically getting cancelled in terms of these talks by Trump late on Friday, so it kind of just shows over on that front, and as such it's created this kind of, I would say, fairly moderate risk-off tone. It's not been huge as yet, and I think the last part of that sentence is important, is as yet. I think the flight to quality bid, so gold higher, up around $9 already, having shot a higher at the reopening of trade. Fixed income futures the same, T-notes up already 9 ticks. The predominant of that move coming when markets really opened. Otherwise, the last few hours in kind of Asia Pac trade has been pretty quiet until Europe has stepped in. It's seen another little blip up, but has had a lack of follow through as yet. Now, that's not to say that that might not occur at some point, probably timings wise more likely if it were to happen when the US come in, because a lot of this broke down late on Friday and kind of into the weekend. There's been a few twists in the tail, so to speak. So quite an aggressive gap lower in the DAX future. European stocks then following the negative trend overnight in Asia Pac, where we've just drifted down in the US stock futures as well. You can see the S&P here down at S2 already, in light of the failure of Trump to be able to push through this healthcare bill. As such, remember last week we were talking about the importance of this as kind of a bellwether event, and hence the reason why the market has acted like it has this morning. So consequently, the dollar quite a bit weaker. Just looking at the dollar index, it's down about 0.7%, and so both major pairs being supported, both Eurodollar and cable up around 60 to 70 pips each respectively, cable back reclaiming the 126 handle. So let's get straight into it and have a quick look then at the headlines and news flow from this weekend. And Trump lashes out at Republicans for defeat of their health bill. So Trump lashing out at the leaders and groups on Sunday for the defeat of the bill to repeal and replace the predecessor's healthcare law. In a Twitter post, Trump criticized the House Freedom Caucus, the Conservative Heritage Foundation, and the free market advocacy group Club for Growth. Pretty much usual Trump fashion then. Obviously he's not been managed to get them on side, and as such then he's used the communicative device of Twitter in order to, rather than just have conversations or pick up the phone, to kind of blast people for going against him. The criticism marked a shift for Trump, who avoided blaming Republicans and House Speaker Paul Ryan for the defeat of the bill. The bill being one that was really Paul Ryan's, of his creation, and so Trump at the weekend making a few noises that really it was Ryan who failed to deliver and getting his own people on board. And then what seemed, at least initially, to be another shot at fellow Republican, Trump posted a Twitter message on Saturday urging his followers to watch Jeanine Pirro on Fox News on Saturday night, where she opened her show by calling for Ryan to resign because he failed to deliver the votes on this healthcare bill. So it, quite frankly, is a bit of a pantomime show at the moment in US politics. So inadvertently or indirectly, Trump basically saying, Ryan, you need to step down because you've really messed this up for the Republican Party, without directly saying it himself. So certainly it will be quite interesting to see how politically this will play out, but obviously it's had an immediate ramification for market pricing, and that we were looking at this as the kind of, will Trump be able to deliver on his promise of the kind of Trump trade that's dominated financial markets for the last several months since the election, and this would be the first signs that maybe he's going to be in for a tough time to deliver for this such high expectations that the market has. A couple of charts this morning then that Bloomberg is snapping and kind of encapsulating this idea of the Trump trade, and the greenback having slid through the 200-day moving average. of which you can see here the white line, the movement that we had obviously going into post-election, the whole kind of fiscal element and stimulative growth that would have to the US economy. Saw a tremendous repricing of the dollar, as increasing inflation would have meant as well the Fed getting more aggressive with their rate hike cycle. But we've taken back a huge proportion now to where we are at the moment from that initial rally that the greenback saw, and back below the 200-day moving average, which is something quite a lot of people often pay attention to. Looking elsewhere, in terms of the US benchmark S&P 500 nearing its average price for the year when measured using mean prices paid by investors, falling below that level suggests a drop into losing territory. Short interest climbing to a 1-month high on key US stocks ETFs. If you remember, I think it was in the Bank of America fund manager survey, it was the most, I think it was turning the most bearish it had been, or they had deemed US stocks to be the most overvalued since 2001. And now, the kind of these super elevated levels on several metrics, people are saying, can this be sustainable given the fact that it's looking increasingly unlikely that Trump, now having had this healthcare bill fail, that he'll be able to bring forward any of these other tax reforms and so on in any type of quick fashion. So short interest is on the rise, people looking to get positioned in a way to be able to short the market. And then obviously something which has been a bit of a phenomenon really of 2017, because despite all the ongoings that have been happening, particularly on a political basis, the VIX has continued to track down at record low levels. However, it's slowly kind of snapped back into life just last week. And so you can see here the equity volatility measure rose last week by the most in a year. So it's immediately shot higher on the back of this nervousness on the Trump situation. And legs to the bond rally, treasuries remain within range seen since the Trump election. So obviously the yield play on the back of any unwinding of Trumpflation, if you like, could certainly be a key thing to look out for. So Trump very much at the forefront. Timings wise, had a question put to me this morning. Do I think that the timing was anything to do with it, in the fact that he kind of cancelled it rather than going to vote and just getting defeated? And I think that definitely would have been the strategy. I would imagine on a top level, Trump would have been in discussions with everyone all of last week, then into Friday, and probably late Friday night he would have seen that this wasn't going to go through, i.e. he couldn't get that Freedom Caucus on side, and so he was left with no other choice but to kind of be a preemptive strike and to cancel it rather than be defeated. There's probably, he can remain at least a little bit of credibility. If he looks to do it as well over the kind of weekend, it kind of negates the market being able to hit it in a live environment if there was a vote to be ongoing, let's say this afternoon or this evening when Wall Street was open. So maybe a kind of front running the bad news, Trump just pulling the trigger and just pulling the plug, if you like, on the whole thing. Might have been the right strategy, at least to contain some of the fallout. Now, as I say, one of the things this morning is obviously you've had this move that's occurred across assets, and we're having a little bit of a breather after the initial reopening of trade, a little bit of selling overnight in Asian trade at the beginning. However, we're kind of just sitting at current market prices. I think a morning like this, for any of the newer guys, you've just got to be a little bit patient. You obviously know what the situation is in terms of this is, a net negative. It should spark a flight to quality in the kind of traditional assets, but don't try to force your idea on the market. Directionally, you probably will be right today, but you just got to be a little bit patient. Just pick your timing, and then when the US come in, maybe that's a trigger point. Then when the volumes pick up, that you might get to in action some of those trades. So just a bit of patience on those entries. A quick look elsewhere. As you can see, top left, The euros, it was contained kind of overnight in Asia Pac trade by really that R2 level. However, as Europe's come in, it's just sprung higher again. So we're up around 60 pips and above a 109 handle this morning. Now, obviously the dollar weakness is a key reason for that, but we have had some news from Germany over the weekend. Angela Merkel, obviously everyone's focused on France in the near term, given in about a month's time we have that first round vote for the presidential elections, but the federal elections in Germany obviously happening towards the end of the year. And what we have seen is Merkel struggling more recently in the polls. But over the weekend, she gained a surprise boost to her hopes of retaining power in September's parliamentary vote, with her Christian Democrat Party confounded pollsters with a big victory in a closely watched region. So that's basically the industrial region of Saarland. So it was the first major kind of defeat and setback for Martin Schulz, of the new Social Democrat leader, and again was against what the polls were indicating, which is quite interesting, because normally what we've seen is polls inaccurately predict that of underestimating a more populist movement. This is kind of the opposite of that, where the more traditional kind of party, if you like, and the more Euro-friendly option has kind of won out in terms of Angela Merkel. So certainly that's probably drawn a bit of attention for the Euro gains as well this morning. For cable, obviously we've claimed 126 handle, and this week does include the triggering of Article 50. Obviously that's coming on Wednesday. I would suggest though that the actual trigger event in itself is largely a non-event. We know what day it's happening. Really it's more about the noises that you get out of Europe in toward how they kind of see the first negotiations going. Quite an interesting point by Jim Reed at Deutsche Bank note this morning, and I totally agree. I'm sure on the day when Theresa May announces that triggering of Article 50, I'm sure she has something up her sleeve in order to say something overtly positive to keep the markets, on a front foot, that Britain is doing the right thing to kind of get the public on side as well in terms of sentiment. So not expecting that to be a massive market mover, but obviously from that point thereafter, comments surrounding what the government have to say and what EU have to say will start to have a greater importance then for defining the shape of negotiations as we go forward in the first few weeks of April. Some other things to be aware of from the weekend, and this is taking a look at oil. And we had that meeting at the weekend this was basically the catch-up meeting of 5 nations post the agreement at the end of November of 2016 from the OPEC cut. This was a scheduled meeting they already had planned in before then the next OPEC meeting, I believe, which is in May. But a pledge by crude producers to consider extending their output cut failed to excite oil bulls, with prices dropping as more time is seen needed to trim swollen global stockpiles. So the kind of general gist of it was the 5 OPEC nations joined with non-OPEC Oman to voice support for prolonging cuts past June, with Kuwait saying it should be for an additional 6 months. So that was the OPEC side. And so really that hasn't really changed too much from what you guys heard last week. OPEC is starting to get a little bit more vocal as the price continues to remain quite heavy in oil, that they should be doing more because they want to verbally intervene to prop the price up to negate any big selling. The only problem here is that Russia once again have said that they need more time before making a decision. Now, Novak, the energy minister of Russia, was very vocal to say that at a separate meeting to what was going on with these OPEC 5 nations who were discussing at the weekend. So oil at the moment is still negative this morning. So it kind of just, it's a familiar chart, this one I'm just showing with you, as OPEC members back an extension to output cuts. This is because crude, you can see here, is continuing to stockpile an oversupplied market, and OPEC daily production, they're having to counter that by continuing to decrease their production. You can see here at the left-hand side sitting just above that 32 million marker. They'll probably have their hand forced by the likes of Russia, and of course, most importantly, the US. Now, for any of those who didn't stick around late on Friday, then you had US crude production hit a 13-month high. Oil rig count now doubles off May 2016 low. Remember last week we were talking about an oil rig count of 16 and how that's pretty much double the average of what we normally see in rig count increases. Well, on Friday, the oil rig count was up 21. So the most since January. It's now at 652, and it's the highest since September of 2015. So if I just have a look at, this is basically the oil rig counts. You can see here at the bottom, the US are ramping it up, so to speak, at the moment. So US output still very much aggressively on the upside. You've got Russia hesitant to want to join the OPEC chorus of extending these cuts. So oil fundamentally, I'd say, is still likely to be pressured fundamentally to the downside. The only thing that could stop that, I guess, is a weaker dollar if that inverse relationship starts to come in. But from a demand side of things as well, don't forget the reason why that dollar is weakening is on the back of a lack of a fiscal element coming in from Trump, which ultimately means that US economy then might not perform as sharply as many are positioned for. And if the US economy doesn't outperform strongly, then the rest of the global world economy might suffer to that extent. So on the demand side, it could lessen. So looking a little bit bearish at the moment, the setup in crude oil from that point of view. Quickly then, just a few other things to have a quick look at is Le Pen. And so the reason I point out the French presidential elections is there hasn't really been a great deal of new news that's occurred over the weekend. The latest opinion polls at the end of last week had Macron at 63, so the divergence between Emmanuel Macron and Le Pen in the second round is getting wider at this present point. But a couple of research analysts or surveys being conducted by Bloomberg at the weekend, and where they've basically canvassed a large portion of economists to see where they think euro dollar would go to in the event of a Le Pen win, and most are looking at parity, if not below. There's the second largest cluster looking at 1 to 105. We're trading at around 109 handle at the moment, and this kind of encapsulates, I guess, the fact that, as we've discussed many a time, if Le Pen were to win, actually, I guess technically speaking, it would be a bigger shock than Trump and Brexit. Even though emotionally we might be better prepared, I'd say, for the what if, the more populist scenario winning, actually from the various nature of the way that the votes would likely then get split upon the fall away of the first round candidates, likely more to back a centrist person. The average margin of error on polling, even at Brexit, which was the most inaccurate, would say that Le Pen's chance of winning is just too greater. She's just got to pick up too many new voters rather than her staple core, if you like. And so, as such, the reaction in the market is likely to be very aggressive if that outside scenario were to occur. So, a couple of charts this morning talking about that. Elsewhere, if you were looking at the Aussie currency, the commodity-linked currencies, you've got a bit of a mixed picture at the moment because you've got gold higher on this flight to quality bid. Gold's up $10. Oil, though, is lower, down 36 cents. And just quickly to show you, the China iron ore prices were down nearly 7% overnight. And if anyone's been following this Chinese situation with iron ore futures, you can see here really since the beginning of March they've seen a dramatic collapse in prices. The fall comes after iron ore inventories at China's ports rose for a second week running and at a faster pace to a record 132.5 million tons. So basically it's a oversupply and inventory situation that's occurring here. The drop puts the price of iron ore at its lowest since January the 10th and represents a fall of nearly 18% from the most recent peak seen on the 16th of March. So maybe not quite an all-out clear picture with the Aussie as if you're looking purely on a commodity play. Okay, quick look at the calendar, because I am aware we've got some key German data coming up shortly. They've got IFO on this calendar at 10 o'clock. I'm sure that's incorrect. IFO is normally 9 o'clock, so I'll look to wrap up this just in case. But IFO is really the only major data we've got today. You've got Lautenschlager speaking later. Feds Evans and Kaplan are both speaking from the US Fed, both of which are voting members, are going to be very late in the evening. So IFO coming out shortly, that's going to be a fairly influential number as well to just keep an eye on. But the bigger theme is risk off, Trump failure. How much of the belief in the market is that as a clear signal as to him being able to follow through on the more pressing need of fiscal reforms? If I was Trump, I'm pretty sure, and from a news expectation point of view today, I would be expecting either a tweet, a press conference of some sort from Trump where he's going to quickly look to move to talking about tax reforms in order to negate any negative sentiment building up on the back of the failure of the healthcare bill going through. So be mindful of that, to stop any massive selling in this market like we had last week. I would imagine Trump's going to be pretty vocal to bring about some of these fiscal reform agendas to the forefront in order to appease the market. But as I've been speaking, DAX just pushing now back to session lows. I'd just be a little bit careful here. You have got the German iPhone number coming up shortly, so keep an eye on that as well. Okay guys, going to leave it at that. So have a very good morning, and I'll see you in the chat room. Thank you.